Hello and welcome back to Proactive New York. Joining me right now is Jeff Szyperski, CEO at Chesapeake Bank. Jeff, good to see you again. How are you?
Good to see you too, Christine. Doing great.
Good to hear. Jeff, first quarter earnings out this week. Another period of growth for you?
It is. We had probably what is definitely the best quarter we've ever had in the history of the bank. We finished with a net of about 5.2 million. But we don't need to annualize that for the year, but we had some significant, about 1.87 million of PPP fees from round one that were recognized in income in the first quarter. So we still had a good first quarter absent that, but with that, it was a 56% increase year over year. So we don't anticipate that going into the latter part of the year, but it's always nice to have a really good start.
Big congratulations on that.
Thank you.
You mentioned PPP loans. So how do you expect demand to continue there?
We did about 70 million of round one PPP loans. Round two of PPP is strong, but it's run at about half the pace. We have right about 35 million of round two of PPP loans that we processed. Whenever we realize that, it will probably be about just under 1.9 million in fees that we'll receive from those, but that'll be interspersed through the latter part of 2021 and possibly into early 2022. But we're having good subscription and we're helping our customers, which is probably the most important thing that's driving us to do that.
But as you said, you're not expecting second quarter to overtake first quarter here.
No. We'll probably start tracking back on budget again in the second quarter is what we anticipate. So, we got out of the chutes fast, have good prospects for the remaining of the year, in our opinion, but it will not be at the torrid pace the first quarter was.
Yeah, talking about the kind of remainder of the year here, are you seeing any weaknesses in asset quality as, we see unemployment and stimulus checks roll off eventually?
Yeah, that's a great question, Christine. We've been paying so much attention to asset quality ever since March of 2020, sort of hyper-focusing on it, just worrying about when the next shoe was going to drop. And it really never did. And so our asset quality through the end of the first quarter, we have non-performance of just slightly over 1%, which is an extremely strong number. And that's been steady since December and then really into the latter part of 2020. So our asset quality is maintained very well through this. And there are some segments that are affected, but in general, we've weathered the storm and our communities have weathered the storm fairly well.
Are you expecting that to potentially continue?
We are right now. I think everyone is probably where you are and the rest of America is. Everyone's sort of chomping at the bit to return to normal operations. Our branches are fully open again, and we have our support functions slightly above 50% back on site. We anticipate returning to normal operations by the end of June is what we think. And from a customer perspective, people are sort of chomping at the bit to get back out again. So we anticipate a strong latter part of 2021.
That's great to hear. Yeah, looking forward to getting back to normal. Jeff,
Yeah.
It was great to see you and congrats again on the quarter.
Thanks so much, Christine. Have a great day.